Although the economic conditions were absolutely dire, mainstream media insisted that the US economy recovered throughout June, and the stock market continued to increase every clue of good news. But now the narrative of economic recovery is completely dead, because the numbers show that the US economy is moving in the wrong direction quickly. On Thursday, the Labor Department announced last week that 1,416 million Americans are making new requests for unemployment benefits. Prior to this year, the all-time record for a single week was only 695,000. And so we're talking about a level of unemployment that is absolutely disastrous. But what really worries many analysts is that the figure from last week was slightly higher than the previous week. Many states are introducing new restrictions as the number of confirmed COVID-19 cases continues to increase. And this has a major impact on economic activity. I remember the fear of COVID-19 for months will prevent economic activity from returning to normal levels for the foreseeable future, and that is exactly what has happened. Overall, more than 52 million Americans have made new claims for unemployment benefits over the past 18 months, making a huge difference with the largest increase in unemployment in US history. In fact, these dwarfs all the previous spikes so much that it is not worth mentioning others. Of course, not the depressingly bad employment figures. According to Jeffries, 19% of small businesses in the United States closed at the end of June, but now this number has increased to 24.5%. Retail slowdown. In April, US retail traffic declined by a staggering 98%, according to Cowen. Traffic steadily improved, with June traffic down 57%. But that rebound has stalled. US retail traffic fell 47% from a year ago. During the second week of July, Cowen said a slight deterioration from the first week in July when traffic was down 45%. Small business shutdowns. As of Sunday, 24.5% of small businesses in the United States were closed, according to Jeffries. That is worse than late June when only 19% were closed. Jeffries pointed to particular weakness in COVID hotspots and noted that small business employment had dropped to levels unseen since the end of May. Weaker spending, after plunging by as much as 31% year over year in early April. Purchases on credit cards issued by Synchrony turned positive in late June. However, Synchrony said Tuesday that spending during the first 2 weeks of July was down 2%. Just think about that number for a minute. Nearly a quarter of all small businesses in the entire country are closed. And the really bad news is that many of them will never end up reopening. At the beginning of the pandemic, I received a lot of criticism for stating that many of the small businesses that were shutting down at that time would never open again. But over the long term, the numbers have shown that I was correct. In fact, Yelp says that a whopping 60% of the restaurants that were initially listed as temporarily closed on their site are now classified as permanently closed. It's tough out there for restaurants and other small businesses. Yelp's economic average report out Wednesday shows exactly how tough. 60% of the 26,160 temporarily closed restaurants on the Business Review site as of July are now permanently shut. Temporary closures are dropping and permanent shutdowns are increasing. The fear of COVID-19 will make it clear that, as long as this pandemic continues, the majority of the population will continue to avoid restaurants and will continue for a long time. We will lose many small and independent places where we can eat. Most large company chains with very deep pockets will survive for at least some time, but there is nothing to change what small and independent restaurants mean for our communities. Bars and clubs are also hit extremely hard. According to Yelp, 44% of the bars and clubs originally listed as temporarily closed in their site are now permanently closed. Bars and clubs are also closing forever at high rates, 44% as of July. Of 5,454 temporarily shuttered, bars and other nightlife establishments are shut for good. Yelp broke down which cities and states are experiencing the most closures, both temporary and permanent. Places like Honolulu, San Francisco, and Las Vegas were struggling to keep businesses open as the cities with the highest rate of closures. Other sectors of the economy are doing relatively better, but the overall outlook for small businesses in America is exceedingly bleak. In New York City, it is being projected that 1/3 of all small businesses will never be able to open again. As many as 76,000 small businesses in New York City, 1/3 of the 230,000 citywide, may never reopen after forced to close during the COVID-19 lockdown. Business leaders are warned. The Partnership for New York City, a not-for-profit organization that connects business leaders with local government, predicted that 76,000 small businesses will never be able to reopen in a report produced by 14 consulting firms. Borough Chambers of Commerce estimate that as many as 1/3 of local small businesses will permanently close as a result of COVID-19. Most small businesses have less than 3 months of cash reserves, the entire length of NY pause. That means that funds to restart, pay back rent, and buy inventory are exhausted, leaving tens of thousands of entrepreneurs at risk, particularly business owners of color, the report reads. It also pointed to the loss of revenue from the 65 million tourists the city relies on every year for money as a source of worry for many hotspots. I know it's hard to believe this number, but it actually happens. Politicians want to encourage people to get back to work, but for millions of Americans, millions of people have gone forever. Air travel is another industry that has definitely been devastated by this epidemic. After a moderate jump in June, the number of air passengers starts to drop again. The resurgence of coronavirus infections is derailing the travel industry's modest recovery. The number of air passengers processed through TSA security lines fell during the week ended July 20th, compared with the prior week, according to Bank of America. This metric is down more than 70% from a year ago. United UAL CEO Scott Kirby told CNBC on Wednesday that the airline does not expect to get anywhere close to normal until there's a vaccine that's been widely distributed to a large portion of the population. All the figures I shared in this podcast tell us that we're in an economic depression. Many had hoped that this economic decline would be short-lived and a V-shaped recovery would begin after the coronavirus lockdowns were removed. However, the revival of the cases has resulted in new restrictions being implemented, and economic activity is slowing again. As a result, we must all be prepared to ventilate a long-term economic storm that will be incredibly painful. The last recession was bad, but it is not worth comparing with the times we are entering now. All our lives are turned upside down, and many people will not be able to cope with the next person.
Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.